Hello, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. We're going to make some technical sense from the dollar versus yen price action, so stay right there. First of all, the bias remains more bullish here. We've seen the dollar versus yen step higher really since going back to earlier this year, where the price in January started to build to the upside. We did have a pretty decent correction back in February into March, and then rotated back to the upside, correction up, a smaller correction, and the last move to the upside here. Now that last move to the upside took the price above the 61.8% retracement. That's how they moved down from this high going back to the 2022 high to the low that we saw in 2023 toward the beginning of the year. The 61.8 comes in at 142.49. It also last week moved above this swing area. The swing area had a number of different highs going back to the month of November. And then in trading last week, the price came into that area right there, found sellers against it 1-2 different times, and then broke to the upside during Thursday's trade and stayed above that level. On Friday, the low price reached down toward the 61.8% retracement, but found early buyers, and in trading here today, we have a higher high. So overall, the bias is to the upside off the daily chart. That makes sense from a technical perspective. If the price were to go below the 49 level, but below the 142.24 level, then all bets are off as far as the bullishness from this chart. But right now, the buyers are more in control. Now let's drill down to the hourly chart and see what that chart is telling us. And what we saw in the trading last week was at the session lows right here and here and here and here and here. What did the price do? It found support against the rising 100-hour moving average. So is that bullish or bearish? That's bullish. Buying against that level. Buyers took the price higher here and then took the price higher here. On Friday's trade, we had more up and down, but the price did close higher, and that is where we came in today. Now, in trading here today, we have seen a rotation back to the downside, but if we take the low from last week and the high from Friday's trade, the 38.2% retracement of that move to the upside stalled the fall. We did find early buyers against that level, and the price started to rotate back to the upside. So, are the sellers winning here? Not really. I mean, although the price is lower on the day and the price did correct lower, we did find support against the 38.2%, well, ahead of that 38.2% retracement, and that's more bullish for this pair. Now, in addition to that, we also have this rising 100-hour moving average. Remember, it was support all through here. So as time goes by and this moving average starts to move to the upside through here, we're going to see that move closer and closer to the 38.2% retracement over time, and that is going to be another key target that we need to get below if the sellers are going to take more control. Also note here that the 50% retracement of the same move up from last week's low to the high comes in right near that 100-hour moving average. So there's double reason right now where that where this area right near the 142.53 level is a key level. Now going back to the daily chart, remember the 49 level, so 53.49 is a 61.8% retracement. So there's lots of reasons why the 50-ish type area in the dollar versus yen is a key level. The 50% retracement off of the hourly chart, the 50% retracement off the daily chart, and the rising 100-hour moving average, or rising 100-hour moving average, I should say, the 61.8 off the daily chart. So there you have it, a technical look of the dollar versus yen. Obviously, the buyers are in control on the daily chart. They're also in control on the hourly chart. And so you gotta go with the trend, and that's to the upside. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.